Hi, welcome. It's Mary Ellen McGonagle, Senior Managing Director of Equities here at Simpler Trading with your Friday Weekly Edge show. Today, we are going to go ahead and take a look at where the markets closed for the week. You will want to be aware of where support and resistance is for these broader markets. Bit of a dicey week. I'll go ahead and dig in as to why and what we can look forward to in next week's holiday shortened period. We'll also take a look at some of the headline news that drove price action last week. And last up is viewer question of the week. And it's all about the surge we've seen in cryptocurrency stocks and how you can benefit from that. I'll share a couple of names that are very instrumental in this grouping and are looking quite constructive. So today, looking at the news from last week, first up, we can see that the Consumer Price Index, the annual number, did show that CPI's index was coming down a little bit. That was good news for the broader markets. However, that core CPI data, the monthly number for January, did show a bit of an increase. So mixed results there, where the bigger picture is showing a decrease in this inflation gauge, while the monthly number still shows inflation remaining sticky. We did get a number of Federal Reserve presidents that were speaking at various events last week. However, their message was very, very consistent in the sense that they are on the lookout for interest rates to elevate higher up to that 5% level and remain there for quite some time. And this, of course, caused strife within the markets. We do not want that rising interest rate environment. Other data, retail sales for January showed a 3% gain. That was a surge and quite the boost for retail stocks, as were strong earnings from select retailers. We did get news relating to weekly jobless claims. They came in below estimates. Ideally, the Federal Reserve does want jobless claims to increase. They want employment to drop so that in turn, consumer spending will drop and inflation will be lower as well. Also, we did receive news that January, that producer price index, this is another inflation gauge. It did come in higher than expected. So both reports were another reason for the market's malaise and deterioration this week. Next week, despite being shortened, it is a very highly impactful relating to data releases that are due to come out. First up on Tuesday, we will see that PMI data come out, and that's the producer index for manufacturing, and also for the service industry is coming out. The Federal Reserve, the minutes or notes from their most recent meeting will be released. Oftentimes, these are very closely scrutinized for any hints as to the Federal Reserve's possible actions or their rate hike cycle. We will, on Thursday, receive Q4 GDP data. That could easily impact the markets because recession fears did pick up this week, and that GDP number can be instrumental there. Also, we will get core PCE. This is another closely watched metric for inflation by the Federal Reserve for January. That'll come out on Friday, as will consumer spending. So put your seatbelts on. We could be in for a bit of a bumpy ride, certainly based on all of this data that is due to be released. So from here, let's go ahead and take a look at where did the markets closed last week. And here we are with the daily price chart of the S&P 500 index. A couple of items to note is the fact that your outside momentum is positive on this RSI side. That's your relative strength index. However, with the stochastics, this is a faster moving momentum indicator. We did dip just into negative territory. So we will want to keep an eye on this stochastics momentum indicator. We can go back historically and see back here in December that we did dip below that, and it did precede a bit of a pullback here. And then certainly back here, August into September, it was a precursor to a lengthier pullback. We did also have this November period where it briefly undercut. So again, more than just a day or two below that would signal a potential pullback for that S&P 500. We also want to pay attention to the position of this index relative to these moving averages. So the S&P did close the week below this 21-day simple moving average. So our next area of potential support on any further deterioration is going to be this 50-day simple moving average, which is quite a bit below current levels. That's at 39.77 at that 50-day, and we did close at 4079. Also of note is that we did close below that 4100 level, which had been a really critical area, and it remains so for the ability for the markets to trade higher. Ideally, we want it to be above not only that 4100 level, but also above that 10-day simple moving average, would get these momentum indicators trending upward, and we can have more confidence in the ability for the broader markets to trade higher. Also, let's take a look at the Nasdaq and see where we closed the week there with this tech-heavy growth index. The RSI also in positive territory, stochastics as well. Now, the Nasdaq has been really outperforming since the beginning of this year, so it would have a little bit further to go in order to turn negative, but also pay attention to these moving averages. The Nasdaq closed above this 21-day simple moving average, which is constructive, but ideally we would want it back above that 10-day simple moving average to help resume our confidence that this index could in fact trade higher. From here, let's take a look at the underlying sectors within the broader markets and get a better feel for the strength relative to the weakness beneath the surface of those indexes. And we can see up here in the forefront XLY. And I did mention that retail sales numbers came in strong. We did see retail stocks trade mostly higher. And from here, that is going to impact this discretionary area. Also, heavyweight stock Tesla was up for the week, up over 3.5%. So that is another constructive reason that this particular group is doing certainly well up here in the forefront with that strength. So next up, taking a look at areas up here that are in the forefront that are relative outperformers. And this is going to be, as mentioned in the past, kind of a slow move. It's not going to be whippy. It's not relative only to what happened last week. But let's take a look here at industrials XLI, really holding up well, certainly if we compare that to broader markets and some of these weaker areas. And a lot of that is due to earnings and then also a sub-industry group that I'll share with you in our next segment here. Technology up here also remaining at the forefront. Last week it was that first sector, so we are seeing it move back just a little, and we can see here is today's pullback to that 21-day simple moving average. We're going to need to keep an eye on these momentum indicators to give us confirmation that that tech sector's uptrend that began in January is still in place. We also want to be aware of some of these weaker areas, and certainly energy is most notable. It was down almost 6.5%. We can see how swiftly it did deteriorate, super high volume, and now your metrics relative to momentum are in negative territory. So that is the case with energy, certainly not faring well, and certainly at that lower quartile here. So if you are overweight in this group, certainly you may want to consider paring back. Also up here in the forefront, we can take a look at some of these other areas that fared well today, but are not necessarily positive quite yet. That would be utilities and consumer staples. Both of these are very defensive in nature, and they will fare well when fear tends to rise. So we're going to take a look at that in our next segment here, where I use ETFs to really further fine-tune that sense of where market strength or weakness is developing. First up here, TNX, this is the yield on that 10-year, and we can see it continues to tick higher, and that's going to be really impactful. Certainly growth stocks do not fare well in rising interest rate environment, and that is most worth noting. Also, the US dollar continuing to tick up, not as dramatically, but certainly this downtrend has in fact been reversed. We'll take a look at the impact of a higher dollar, but it has several areas that it will impact. But first up, I do want to share with you the view of XRT. This is that retail ETF for the S&P 500, and it was up almost 3% for the week. Your momentum still constructive here, and that is good, certainly for several and select stocks that are in that industry group. I talked about industrials holding in well, and here is one of the reasons. This is the Dow Jones Transportation Index, and you can see how it has held in relatively well, all about airlines, truckers, and other transportation-related stocks that are remaining up here doing well given their earnings reports. So from here, as it relates to other areas that had been up in the forefront that are beginning to deteriorate just a little, and that first up here we can see semiconductors. They are still in a confirmed uptrend, but we will want to pay attention to this momentum here that is beginning to signal a potential shift. So that is certainly worth noting. Also, if we go back and take a look at this list here, I did want to point out volatility on the rise. This is similar to this period in the beginning of February, right before that CPI number came in lower than expected. So this is also known as that fear index. And ideally, we do not want a rising volatility backdrop because that is indicative of a market that is declining. And from here, I do want to go ahead and share with you a view of Bitcoin. And for those of you that don't follow it particularly closely, it is worth noting this is a daily price chart of Bitcoin to the US dollar, and we can see that nice uptick here. And really, it began back here in January. We had a pullback in the beginning of February, but now we are advancing above those prior highs. Now, there are several reasons that are being talked about as it relates to why Bitcoin is on the move. The primary one is a short squeeze. Certainly Bitcoin for most of last year, I'll pull up a weekly on this, you can see had been in a downtrend. So that is one reason being cited. The other is the close scrutiny in this space after the collapse of FCX, and that in turn is turning people away from altcoins to the more structured Bitcoin area. So from here, I am going to share with you 3 stocks that are involved either directly in or due to their company's investments in Bitcoin could benefit should we see a continued rise in Bitcoin space. So first up is MSTR. This is a software company, MicroStrategy, and this company actually well over a year ago announced a very big investment in Bitcoin. So you will see the stock move in tandem with the price of Bitcoin and other cryptocurrencies. So from here, we can see this is very much in line with the move that we saw in Bitcoin going into February, and then this nice uptrend here. Note the RSI never got into negative territory here. It paused at that net neutral, and then likewise with your MACD still up here in positive territory. So that could be one way to potentially participate if you're not inclined to purchase Bitcoin directly. Another company many of you, I'm sure, are familiar with, it is Coinbase Global, and they do allow you to purchase and then store your Bitcoin with their company. And we can see similar price action, but not quite as strong. The company has had difficulty, certainly relative to instances where there has been Bitcoin, certainly disappearances and other actions that have made the company not particularly attractive, but we can see here technically that it has the same metrics taking shape, where on the pullback, your RSI remained neutral and now is up here in positive territory, likewise with your MACD. Last up, we can take a look at SI, and this is Silvergate Company. I'm going to go ahead and pull up a full quote and share with you the additional information that you can get with certainly this particular service. But this is a financial company. It is a bank, and the company is very much involved in the processing of Bitcoin. So what we can see from here is, again, similar price action, but again, not as strong as the move into Bitcoin itself. The volatility here in the momentum indicators making it not quite attractive, but I did make note that the MACD just entered into positive territory here today. So perhaps this one would be more for your watch list, with MSTR being the most vibrant of those three. Everyone enjoy the nice long weekend, and I'm going to look for you here again next Friday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.